Hi there everyone, good morning and welcome to this edition of The Market. I'm Avan Dabash, with me Anisha Jain as well as Ajay Sharma, and well, we're waking up to pretty healthy global cues. So yesterday we might have retreated a tad, but we wrapped up the day at 21,441 by the time we shut shop. So it was a pretty solid day of trade with the broader markets in tandem. The small cap index might not have really kept up, but the breadth was pretty smart. This morning as well, you've got a pretty healthy handover coming in from Wall Street, and that's what our markets are expected to pretty much react to. You've got the Nasdaq Composite, which is trading at a life high, and the S&P 500 as well, gotten off to a heady start at a 23-month high. So clearly kicking off the last week of 2023 on a very positive note for Wall Street. And this morning, you've also got the Asian screen, which have managed to gain ground. The Australian stock markets as well have hit a near 2-year high. That aside, you've got the dollar index, which is headed for the worst year since 2020. Gold prices have spiked, and Brent crude as well, Ajay, close to $81 per barrel. So I don't think there's any complaints. Looks like we're ending 2023 with a bit of a flourish.
Well, that's correct. Not only has dollar index fallen below 102, it has gone closer to 101.5.
Yeah.
That is actually, boosting appeal for emerging markets. Yes, of course, the party in the US market continues. We are just shy of a record high, closer to 4,800 on the S&P, Nasdaq and Dow. And now Oppenheimer, in fact, put out a note last evening calling it that 24 December of 24th, S&P could be heading to almost 5,300, 15% rise after this rally. Because of course, bullish bets increasing in the market, fund managers reducing their cash positions in anticipation that the Fed will go calm. Because ever since the PCE data actually came lower, it kind of renewed in fund manager the interest into the market, saying that it will make the case for rate cuts by mid of next year much more stronger, and that is why continuously there's a rally in the US markets and rest of the markets as well. But yesterday we are still kind of, yes, it was a good day for Indian markets, but at least that 48,000 odd on the bank Nifty and 41,600 is still far away, right?
Yes, indeed. That perhaps seems to be the case. And but at least when it comes to our own markets, the fact, Anisha, that we did manage to gain for 3 straight days on the chart.
Yes, after that, nosedive that we had seen on Wednesday, since then we have been just one way up, and we've almost recovered most of the losses that we had seen that day, at least on the mid-cap and small-cap space, though the cost Nifty is still a 150 point away. The weak link for the market continues to be Bank Nifty as such, because yesterday it was still very, very range bound, did not manage to outperform at all. What really did spike yesterday was India VIX, that was high by 8%, very close to that 15 mark, almost I think 9 to 10 month high that we have seen on India VIX. Quite understandable given that there's expiry tomorrow, so ahead of that there is a bit of a nervousness in the market. Nifty Bank is the other one that I was talking about. It's failed to hit that 48,000 mark convincingly, so very strong hurdle at that. But the good news about Nifty Bank is that after 6 to 7 series of underperformance, this series it is likely to outperform the Nifty. So I was just going through the data. Over the last few months, we have seen that the Nifty Bank has been underperforming the Nifty. In fact, in November, it was up only 4% as compared to 5.7% for the Nifty itself. But this month, the Bank Nifty is on, on track to gain almost 7%, whereas Nifty has been up around 6.5%. So there is that outperformance. The big question is this a precursor of sorts to what is expected in 2024? Because Ajay, this year the rank underperformers, if you can pull out one sector, is the banking index, especially the private banking names. I'm not sure if this could be, if you're reading too much into it, or finally there's just some hope that next year is going to be better.
Anisha, actually, more than half of the weight of the bank index actually comes from 2 banks. HDFC and Kotak. And both have been underperformers. And it has been an eternal wait. When will HDFC start moving? When will the overdue re-rating actually start? But let me tell you something. I'm picking up from the street at one of the veteran investors of the market. Silent bulls, he's also called. And even Rakesh Jhunjhunwala, late legendary investor Rakesh Jhunjhunwala, considered him his mentor in many ways. We are picking up from the street that he's also doubling up on his bets on HDFC Bank from here on. This series onwards, he's been a big buyer. Well, essentially, just picking up from the street, but essentially the idea is that now serious money is, looking at, and the other day we were talking to Govind Parikh also on the call, and he was also doubling up on HDFC Bank. So it appears that the case is building up that HDFC Bank led move in Bank Nifty may actually come. But it was yesterday's move also came on very low turnover. The volumes are very on the lower side. Institutions, obviously 3 days away, 2 days away from New Year's, the participation from foreign funds were on the lower side. And that's why FII-DI number is actually not throwing out a big picture. Index futures, you saw some fresh long positions. But beyond this, there's also another very important news which we need to mark for our viewers, which is we may be looking at the market on a daily basis. We may not realize what is actually happening. What has happened is that India is gaining its heft in global market cap. Yes, that's correct. India's weight in global market cap has edged to 3.8%. As per the Bloomberg calculation, the data shows that we have become the 5th biggest market globally, of course, because of superior performance from our lows and much more improved macro situation. Yesterday, we saw even the current account deficit shrinking a bit. So that has led to very sharp rise in India's market cap as a percentage of global market cap. So that's a rise of the India movement, and look at how we have been adding weight. So for investors, it's good news.
And as we've been talking about as well, day after day, it seems like all the ingredients really, all the pieces to the puzzle seem to be in place, whether it's the global markets, the macros back home, the earnings season, to a certain extent, the valuation picture, all of that. So really the India story, all in all, looking very promising for the year ahead. But that aside, let's put the spotlight on one individual sector that really shone in yesterday's trading day and cannot get your eyes off those chemical stocks. Take a look at the stocks on your screen as well. Those are the kind of returns that you witnessed in a single trading day. So clearly a very smart long build-up being witnessed, and volumes as well have been pretty encouraging, or the delivery data as well, with respect to what we witnessed on these individual counters. So the entire chemicals pocket as well, Ajay, was in the spotlight, in the limelight on the upside.
We've been witnessing one-off movers last couple of days, but yesterday what happened was it was a synchronized move in the entire chemical space. The entire basket, the smaller ones, the larger ones. Yes, last 15-20 days, Aartis of the world, SRFs of the world were moving. But yesterday, you almost saw every chemical stock of. In fact, forget about pure chemicals. There were stocks which Anisha and I were talking about in the lube space. They have a touch of chemical in it. And you saw lubricant stocks also running. So basically, the market wants to hide in underperformers and looking for reason. And we saw chemicals for this quarter, the third quarter, chemicals sector is likely to post another weakish quarter. It's the fourth quarter onwards that there's a ray of hope, but people are not waiting and were latching on. Not only that, you saw some commentary coming in from Rajnath Singh regarding our upgradation of a naval fleet. You saw defense stocks, the naval-oriented Cochin Shipyard, Masgao docks, rallying sharply. So there was individual pockets of seeing very good, interesting trading action yesterday.
Yeah, very interesting trading action on those chemical names. But the other interesting bit is what is happening in the IPO market. Yesterday as well, it was a day of 3 listings, and today as well, 3 listings. Doesn't feel like it's probably the end of the year or holiday season is here, because there's a lot of action when it comes to the primary market. But talking about the stocks which are going to list today, Happy Forgings is one. The issue price, remember, was 850 thereabout. The IPO was subscribed 83x, and the grey market premium is what we're hearing on the ground, could be around 25 to 30%. The stock was attractively priced because the valuation was around 25 times forward earnings, 25, 27 thereabouts, whereas the sector average is close to 30. So that's the reason we are watching out for Happy Forgings. Credo Brand is the other one, got a decent subscription of around 52 times. Grey market premium is again around that 30% mark, so watching out for this one. And RBC Jewelers, of late we have seen all these jewelry stocks seeing quite a bit of traction. The IPOs were subscribed around 17x, so the grey market premium is not too hefty. They are working with a grey market premium of just around single percentage point, and that perhaps could be on account of valuations as well. It's not too expensive, to be honest. It's around 13 to 14 times, but nonetheless, let's see how that one lists.
In fact, this particular smaller one, so just a 400 crore company, after listing, I will watch out for the follow-up buying, whether it comes or not. Because the reason is the client base of this company, RBZ Jewelers, 50% is Titan, others are Joya, Lucas, all these branded guys, Senco Gold. So if they have that kind of profile of and the margins are very high, by the way. They do some very niche kind of jarao work. You would be knowing because you're from Jaipur, and this is a Jaipur-based company, right? So we'll be getting the management later. She loves jewelry, I'm sure. So you should study this company. And these guys have, after listing also, mid-teens, right?
Yeah.
I remember Senco also, at the time of the IPO, they had priced themselves 17, 18 times, when the sector average was 40, 50 times. So watch out for this one. Even Mufti. Mufti, after listing, is valued at 18 times 1 year forward. Look at how other apparel stocks are, at least 25 to 30 times 1 year forward. Happy Forging, of course, it's in a happy space right now because Forging, Bharat Forge, RK Forge was sounding very bullish. So the tailwinds are very strong in the forging space. Valuations are slightly above fair, I would say. But I mean, one is the IPO action on listing pop, and then the next one actually begins. So it will be interesting to watch out for these names in today's action.
Yes, it certainly will. So lots to watch out for through the trading day. But time to bring on board our chartists and find out what they make of the market setup. Nooresh, Merani and Kunal Bothra joining in. Kunal, let's get in your take. The Nifty bank, yet again, that 48,000 mark continues to remain a bit of a stumbling block, while the frontline index managed to gain for the third straight day on the chart. What are you making of this dichotomy? And as we were discussing earlier, the heavyweights within the banking space, HDFC Bank, Kotak Bank, when are we going to see some sort of an incremental up move? What are the charts suggesting?
So good morning. I believe that we are going through a point where the indices are consolidating, and the Nifty and the Bank Nifty are of course taking a bit of a resistance at the psychological as well as round figure marks for themselves. But I think when you look at the mixture of the sectors within these individual indices, I think they have done exceptionally well. So whether it was the start of the private sector banking stocks, HDFC Bank, Kotak Bank, etc., which have moved up higher, then we saw the PSU larger cap underperforming names like SBI, etc., moving up higher. And now we are seeing the other part of the wheel where you have the likes of Central Bank and Bank of Baroda, again underperformers in their respective category, also making a comeback. So I believe it's a very slow gradual traction where you're seeing a lot of the underperformers taking their own time to try and consolidate and move up higher. The charts for larger cap names, HDFC Bank, Kotak Bank, are still very bullish. These stocks have confirmed very strong breakouts on their individual time frame charts. So I'm expecting this movement to continue. Hopefully, I think now the next important parameter which we typically look out for is the expiry rollovers. And if the premiums for the next series is as encouraging as what it was in the last series, where we had a hefty 150 to 160 points premium on the Nifty for the previous series. So if we see that happening by the end of the current expiry, I think that would again be encouraging for the Jan series.
That's interesting. Nooresh, what's your view at the index level? How are you, placing your bets?
So overall, the view is we are forming a consolidation on expected lines. A flag formation is happening, wherein 21,000 has become the base, and say 21,600, 650 should be the upper end. And we could spend a few sessions here, and that should be a normal pause in an uptrend. And once we cross that 21,600 mark, we get into the next leg of the move, which could be 400, 600 points on the upside. So for now, this is the range. And in this period of time, we are continuing to see decent enough strength in the broader markets, as well as some of the heavyweights coming up slowly and steadily. So we've seen HDFC Bank make a comeback. We are seeing a Kotak Bank make a comeback. So overall, the structure is positive. Same is the case with Bank Nifty, a sideways consolidation, a flag formation. So a good pause happening, which is eventually going to ideally break out on the upside. So continue to maintain hold positions on both the indices.
Kunal, I want to talk to you about the IT index. Yesterday, banks were like, the smaller banks are moving, bigger ones were relatively quiet, but IT index was kind of breaking out once again. In fact, we were surprised to see the way Infosys and Wipro both saw, opportunistic buying exactly at the dip, at the morning dip. Dips were shallow, first of all. We were expecting 3-4% cut, hardly came. But whatever it was being bought. What do you see the chart patterns of IT index and these two large caps in particular?
So there are two things. One is typically in a bull market, any of the corrections or dips which happens on news flow gets bought into. I'll give you an example, divide of IT stocks. I think even Laurus Labs, a couple of weeks back had a negative news flow. The stock fell down from 390 to 365, 370 in a couple of trading sessions, and from there the stock is almost at 440 levels in a matter of 1 to 2 weeks. And we've seen that happening for TCS, for Infosys. These stocks had their individual negative news flow. Specifically for Infosys, there was a news flow, and then the stock has recovered. So I would probably believe that in the strong bull market, this is typically what happens. The other part is also very interesting because what's actually happening is not the likes of TCS, for example, is still I think 100 rupees off from the last 1 1-week swing high. But you have other underperformers like Wipro yesterday made a fresh swing high. Tech Mahindra also confirmed that for itself. So you have differentiated stocks within the sectors which have been erstwhile huge underperformers. And Wipro is nowhere close to its 2021-22 highs for itself. So these are the kind of stocks which are moving up higher. And there is a very strong case of a massive build-up on the open interest for Wipro in the current series as well as going forward in the next series. So that also is a positive for the stock. So my sense is that maybe the texture of the larger cap names within the IT stocks is changing, and I think if this pattern sustains, we could actually have Wipro, HCL Tech maybe as the fresh leaders rather than the erstwhile TCS Infosys.
All right, let's get stock specific and find out the strategies that our chartists are betting on. Nooresh, what's looking good for this Wednesday?
So first is about ONGC, which has continued to slowly and steadily scale up, and the whole oil and gas sector as such looks interesting. So ONGC is a stock which has done nothing for the last 15-20 years as well as for the last 5 years. Finally has broken above the 190 to 200 mark, which was a high back in 2018-19 as well as in 2021-22. So a structural breakout here, very similar to what happened with NTPC a year back. So ONGC could surprise on the way up. A short-term target price of 240, stop loss at 200. Second is a buy on Kotak Mahindra Bank. The stock has been a major underperformer. Slowly and steadily it has made a comeback, and now after making a flag breakout, looks set to test the major resistance around the 2000 mark. A stop loss at 1870 now.
Okay, so those are the top recommendations coming in from Nooresh. Kunal, what about you?
So I'll go with Bank of Baroda as the first stock. Again, expecting the stock to get into a breakout. Good recovery which was seen yesterday for the stock from its intraday lows of 223 approximately. So would suggest a buy with 235 as a target, stop loss at 220. And Chambal Fertilizer is the other stock yesterday which saw a 3-day swing breakout, a classical breakout of the previous swing resistance of 360. So would suggest a buy with a target of 385, stop loss at 360.
Okay, point taken. So those are the top recommendations coming in from our charters. But let's also discuss some of the stocks which are likely to be in news as well. We're putting the spotlight today on Bajaj Auto as well as Mithon Alloys. First, let me start with Bajaj Auto because DAM Capital actually met with the management and they have come back quite bullish about the company because they've increased the target price to 7,200 rupees from 6,000 rupees earlier. They're confident about continuation of the growth momentum that we have seen. They also indicated that the post-festive demand is much better unlike the earlier years, and sequential decline is lower. So of course we see that there's a bit of a jump up during the festive season and a crash. This time around they're talking about that there's not a crash, it's a bit of plateauing out and a steady decline perhaps, and that's why the sequential decline is going to be lower. The two-wheeler industry growth during the balance of the year is still likely to be in high single digit to low double digit. That's still positive news because of course the entire two-wheeler industry has been growing at low single digits for the last few years. So this should be taken positively. They're also expecting positive trend to continue on account of the central election. So that's something which is an added fillip. There are new launches which are lined up by the company, and they're looking at focusing more towards the premium segment on the new launch front as well. The inventory is still a bit high at 6 weeks, but that's pretty much the average that they like to keep. And the exports, which was a bit of a problem, Ajay, for them, is seeming to be bottoming out. So that is another leg up.
Actually, you know what? I'll tell you something very interesting. If you see in the last 1 month, TVS Motors has done 2 big tie-ups, one in Thailand and one in Europe, for increasing their export footprint. So people are already expecting Bajaj also to start taking initiatives and not fall back behind for the increasing their exports and bringing the mojo back in the exports. Pull up the last 1 year chart of TVS versus Bajaj, because these two essentially also have a dollop of export play in it. Hero Moto most of it is actually a India play. TVS Motors last 1 year versus Bajaj last 1 year. People focus so much on TVS, people forgot Bajaj is a silent mover already. Look at that, almost the same kind of, maybe a 4-5% outperformance TVS may have because of the EV play, but Bajaj could be reversing that. Kunal, what's your take on Bajaj? The earlier target, I think it was the 6,000 rupee target by DAM only, and now they have upgraded to 7,200, right? Do you think there's still more juice in Bajaj?
Yeah, there's a different juice for the stock. In fact, what's happening is, Ajay, that many of the stocks are changing their behavior. Now, Bajaj Auto, Hero MotoCorp, these are very high beta stocks in their relative spaces. But then what's actually happened is in the last 3-4 months, 5-6 months, 2-3 quarters specifically, these stocks have gone through very slow, gradual traction. So you don't see any time Bajaj Auto hitting a 5% or a 7% up move. But when you look at this over the a series of 1 or 2 months, these stocks have moved up 10%, 15% higher. So it's a very slow, gradual movement for these stocks, breaking past the psychological round figure marks like 6,000, 5,000 earlier for Bajaj Auto, and then continue to move up higher. And I think it's a similar trend which had happened for TVS Motors. You used to see the stock moving up into a 5% kind of a 10% swing in a span of 3 to 6 months. So I believe that that's the kind of traction which you're seeing. And yes, very likely that Bajaj Auto can continue to climb up higher.
Okay, so that was about Bajaj Auto, but we're also tracking Marathon Alloys. Now, that's a stock we don't talk very often. There was just a bit of interesting news flow that we wanted to put on board, and that's because the company has actually bought, NSE shares worth around 324 crores. Now, what was interesting was the fact that the valuation, if you look at it, what comes out for NSE is 3,240 rupees per share, which is broadly in line with what the, market trading has been happening with respect to NSE. But also in terms of the valuations, just wanted to compare NSE as well as BSE, because BSE, of course, has lesser amount of market share, but it's trading at almost 40-45x forward earnings. Whereas if you look at NSE, that's trading close to 21x. So people are probably putting 2 and 2 together, and they're calculating that if NSE was to trade at the valuations of BSE, as and when it does list, the valuation of the stake that Marathon has could be around 1,000 crore rupees versus the market cap of around 3,000. So it's just an interesting calculation, back of the hand calculation that we have done. But definitely we are seeing a lot of interest in NSE stock as well, and one needs to raise the question as to why Marathon Alloys is in the first place making an investment into NSE. Could be treasury, but still 300
But treasury
crores?
opts 10% of the market cap.
Yeah, exactly.
Current market
300
cap.
crores,
Even
that's
if you're playing it for a valuation catch up, the way BSE ran up, NSE can also like 3x from here on the price to earning. But people would the question shareholders will actually wonder about is why you are in the business of alloys, right? If you choose to do such big bets on investing, capital allocation, but of course it's a smaller company, just 3,000 crore company, and we see, managements get quite creative about capital allocation in smaller market cap companies. So not new, but it'll be interesting to see how the stock reacts in trade today. We'll take a short break now.
Yes, let's take a breather on the show. When we come back, we'll discuss a whole host of other stocks.
Sanjeev Bhasin is also joining us on the show now. Sanjeev, morning. Sanjeev, any take on, there are 3 listings which are going to happen today. Are you any of those companies on your radar, or anything from primary markets which is on your radar?
Yeah, good morning. So Ajay, I recommended Electroforce couple of last week when the issue opened. It has a profitability of 15 crore on a turnover of 80 crore, and it will do 150 crore in this year with a profitability of 35. It's a B2B business, and it's a clientage has Siemens, Schneider, prototyping, precision metal stamping, tool designing, the entire works of insert molding, anything to do with that. The peer groups of that have a market cap of in excess of trade at 35 to 40 times. This just trades at 25 times. And at a market cap of 200, I think this can be an easily doubler in the next 1 year. So I would ask everyone to definitely have Electroforce in your portfolio. It is being priced at 93. 15 crore goes to the promoter as equity as part of their IPO proceeds. The rest of the 55 crore will go into the business, and it's a debt-free business with all machinery written down, depreciation. And I think this is a no-brainer. So everyone's portfolio, Electroforce must be there. It's listing at 93. I can tell you in 6 months you'll see at least 150 on this. And yes, there has been a lot of volatility in the recent listing because of the issue, but this is a standout issue. It's got niche components, and the order book and the clientele from Siemens to Schneider are all of the pedigree type. So that is a must-have in your portfolio. It gets listed today.
Sanjeev, morning. Wanted to get in your take on that synchronized buying, as we're describing it, that one witnessed within the entire chemicals basket. Deepak Nitrite, Tata Chemicals, Balaji Mines, the entire cluster of stocks did very well.
Yeah, good morning. So Avan, you missed out Aarti and SRF. Those have been 2 of our top picks and they've been very, very sweet performers, particularly Aarti from 450 is, I think, cross 630. We still think that is one stock which must be in your portfolio, despite the 70% run up. SRF is a pedigree stock, and Atul. These are three names which we would be very, very bullish even at this price. And like I said, if you took the guidance of what UPL is saying, they are raising capital, but they are foreseeing the future to be very bright, both in specialty chemical and agrochemical. And I think given the spate of valuation, this is one sector which deserves to be re-rated on the back that the China comeback is very much on the cards. That's why you've seen a proxy to that being in the metal space.
Okay, point taken. So that's the view coming in on some of those stocks, chemicals as well as UPL. But the other one I want to discuss with you, Mr. Bhasin, is Bajaj Auto. Do you think it's time now to look at this one also positively, or there are better names within auto that you like?
Well, Anisha, 5,000 was a decent price to get in, or 5,300. At 65, you are chasing the momentum. And, you know, like I said, if you heard Rajiv Bajaj 1 year back, he was very cautious. But sooner, you know, he said that their units in Akrudi now are turning out two-wheeler EVs at such a rapid pace that there's a 15,000 demand production every day. And that tells you that Rajiv Bajaj is one entrepreneur who you know goes with the trend. He migrates very fast for upcoming changes. So hats off to him and how he has modified the company from just a two-wheeler, you know, when the Chetak was there, getting the tie-up with Kawasaki and so on. And now their prototype on two-wheeler EVs are doing extremely well. So yes, on decline, you must have it. It is one of our portfolio holdings along with Hero. And we think that the way forward, particularly on the new launch, tie-up with you know, the new launch which they have, Hero has with Harley and they are with Triumph. Those are going to be huge game changers. As a disclosure, I also booked a Harley at 61 because it was always a dream.
Seriously? You have booked a Harley for yourself? You know, I was about to ask you which two-wheeler did you own in your college days? Was it Chetak, was it a Kawasaki or a Yamaha? And you're telling me that you booked a Harley now?
At our time there was no Kawasaki. I rode the Bullet, and I was like the champion. I was the cricket captain and the junior, and the Bullet was my game plan for going to do my internship at a chartered accountant firm, going to the university, and there can never be a bike like a Bullet. But I always dreamt of a Harley because it was maybe unaffordable or just in the, you know, you dreamt of that. And today I went ahead and booked it. So, you know, maybe I'll take an occasional
That's very
ride.
interesting and very inspiring as well. I abandoned my Enfield in college, but I think I should take inspiration from you and get back, you know, getting myself a pair of two wheels. They say that four wheels actually move the body, but two wheels actually move the soul. So that's what they say about bikes. So this is a little bit of biking banter. So you must be also bullish on Hero then, because Harley is now partnering with Hero in marketing their stuff, right?
Ajay, 2650 is where we stuck our neck out on Hero, and we said the worst is behind. The rural incomes will pick up, interest rates are headed down, and you will see Hero come back. You know, from 7.5 lakh motorcycles which you used to sell about 1.5 years back, they've come down to 4.5. The base can only get bigger. If you went and checked at EV stations, every third motorcycle is a Hero. 4 out of 4, 3 are Hero. So they are adventing very, very fast. And I think Hero on the valuation front and Bajaj on the pedigree side both stand out in this two-wheeler race.
Okay, so zooming away on some of those auto stocks for sure. But the question is, when will we see some of those stagnant, if I may call it, banking stocks start to zoom ahead? The HDFC banks and Kotak banks of the world, Sanjeev.
Well, Avan, they've started to make a move. They're slow but steady. They have a large capital base. And now you have your current account deficit at 1% of GDP. So I think that India's progress is very, very sweet in a global environment. Yes, the markets are already pricing a large part of that. But if the bond yields are to soften and inflation is to be down, then banks are the proxy to credit. And I as a disclosure, have Kotak and both ICICI in our portfolio. HDFC may be a slow mover, but HDFC and Reliance are actually taking the Nifty to new highs. So despite all the humbug about not reaching anywhere, we are headed higher. And even though we are in overbought territory on a lot of the mid caps and so on, the two three steady names will be ICICI, Kotak, and HDFC, which savvy investors should take some money off the mid caps and put it into these stocks. So you are invested, you are in the market, but you are in slower paces, which will over a period of time gradually give you the comfort of earnings, transparency, and momentum. So I continue to think, like you said, Kotak, HDFC, that basket of large cap private banks are very, very, very attractively priced at this point of new highs.
There's one stock, Nooresh, I'd like to discuss with you on the charts, and that is Tejas Networks, the Tata defense play. It's a defense come telecom come a very interesting technology kind of a company, engineering tech kind of a play. But the stock, after a major bout of re-rating, went into a sideways move. Look at the last 1 year chart. Now MK believe that it could be heading above the 1000 mark. Can you just read the charts of that one, Tejas? At what levels would you like to get into this name?
So technically, it has been a slow and steady uptrend all through the time it bottomed out in Feb, March, like most of the small caps did. So the stock has gone up from 550, 600 levels to 850, 950 zones. And now it has been making a range wherein 800 has become a base, 950 is the upper end. So at current levels, the risk reward is good in terms of a stop loss below 820 and an upside towards 950,000 seems possible. So technically it looks positive. The volumes have been pretty low in that sense in relative terms, but once it sustains above 870, 880 mark, we could see volumes also. So at current levels, the risk reward is good. The trend is up. We could expect a move on the upside in the short term.
Kunal, wanted to get in a take on the entire cluster of Adani Group stocks, because this year has been a roller coaster ride for a lot of them. But if we map out the last 1 month chart, we have seen a very commendable recovery kick into the entire cluster of these stocks. I just want to understand, are there anywhere close to recovering those Hindenburg lows that the stocks hit? What's the trajectory indicating?
So there are two set of stocks which have moved up higher. So for example, Adani Ports, Adani Power, I think these are the stocks which have made fresh highs. Covering up their, the massive losses which these stocks had shown, start of this year, towards the point where these stocks have confirmed breakouts for themselves, confirming new highs, as well as breaking past about the previous, swing highs for themselves. And that too at the back of some extremely strong and encouraging volume patterns cumulatively seen over the last, few weeks, specifically for these Adani group of names. But then there are other set of names. I was looking at the charts for Adani, Wilmar, Adani, Transmission Gas, etc. These stocks are nowhere close to their 2023 start highs for themselves. But then these stocks have also shown a recovery, which means one has to try and play a dual play over here. If you're looking at slightly low beta stocks, more conviction ones in terms of the breakouts, and I think Adani Ports as well as Adani Power could be the one which have confirmed breakouts for themselves as well as covering up the previous highs. So they could be looked at in that category. But from the other spaces where the stocks have been underperformers, I think Adani Green is something which is looking attractive at 1600 mark, and Adani Enterprise also, which is looking attractive at 2500, 600 mark.
Sanjeev, the other stock which you've been very bullish on from the peaks of pessimism in Godrej Properties. I remember it almost fell to 12 to 1400. Pull up the longer term chart, and then gradually, I think 1600 is when you started talking about it. Now we are gathering. Yeah.
Because it's in the news today. They sold more than 600 flats for 2,600 crores in Gurugram.
In April to September period, by the way. They've done similar feats in 2 days as well, but that was last year when a luxury project almost got sold off in 2 days. But it appears that the momentum of luxury flats in your neighborhood, Gurgaon, is very strong. Would you still bet at Godrej Properties, Sanjeev, at this price, or closer to 2,000?
Yes, Ajay, you have a good memory, and I have been sticking with Godrej from 300 rupees. Of course, that was 6 years, 5 years back, and people didn't realize what the potential of Godrej is. They own all the land in Vikhroli, and now they are they're a pan-India name aside from DLF. And you have the double wealth effect of gold at 63, for which Awan is laughing, and stocks at 72, for which the entire investing population is. So when you have such a big wealth effect, the first thing to buy is fixed assets. Plus, Both these, Godrej has been a relatively outperformer on the brand name, on the pedigree of the management, on the promoters, and DLF has shed the weight of excess leverage very, very smartly in the last year. Ajay, I still think there is room on the upside, but maybe we are reaching a crescendo as far as leverage buyouts go, because now there is not just the first time user, there is also the leverage of buying property on a leverage on your assets, where you have to be little watchful. I'll give you another name. Today's headline says NBCC sold 2,600 crore of Amarpali flats. They were given the mandate and they were supposed to do that by 2025 end. They've done it a year in advance. And it tells you that the small ticket 2 BHK and so on, which was in the hand of bad builders, is actually being lapped up. So if you read the headline, and NBCC also, by the way, from 35 has gone to 90, and I think it is headed to 120. Not on the back that the valuations are still comfortable. It's a debt-free company, but it is mandating everything in tier 2, tier 3 cities on the back of anything to do with the CPWD and the government. So I think that there is still room on the upside, but valuations in both Godrej and DLF are fairly stressed. So take it with a pinch of salt that we've had these positions from almost half the prices or maybe lower, and we are still invested in them in tranches.
Sure. The other one, Mr. Bhasin, you've been quite positive about from the power sector was IEX. Has your view changed, and any other stock that you like from the power sector now?
No, Anisha, I think IEX as a business for a trading platform or an exchange. See, there are 4 intermediaries: insurance, stockbrokers, AMC, and exchanges and depositories. These businesses have to grow 5, 7, 10 times in the next 5, 10 years. There is no talk about that, because the capital market is growing, and if you keep seeing this type of SIP flows, as a disclosure, as a brokerage, we have options and so on. But IEX is a super play. 85% EBITDA. Even if there is competition, you will see power volumes grow 10, 15 times in the next 5 years. So IEX, IRCTC, and Concor, these are 3 of my top picks. Of course, I bought them when there was a lot of pessimism at 120 and 650 on IRCTC. But I still think the 3 businesses, Concor, IRCTC, and IEX, are superb. I will not see the price maybe for the next 3 years.
Okay, by the way, you spoke about gold, so I just wanted to get in a quick take then. Kunal, basis the way we're seeing gold price trending, with that kind of spike that we've witnessed, what the charts indicating?
So, I think start of this year was very bullish on gold as an asset class, and I still believe that even if you look at the dollar-denominated prices for gold, we've managed to hit a fresh life high. I think 2070-80 was the previous triple top high for gold in dollar terms. I think we've managed to break that in the last few weeks. In rupee terms, we've crossed I think 64,000 also on gold in the last 1 or 2 weeks. So we've seen the asset class participating quite strongly in the last 2-3 months, and specifically breaking past about the long-term resistances. So very bullish on the asset class on gold, even from current levels. And my sense is, in fact, that even silver has started to look very attractive, especially in terms of the dollar-denominated prices, where it's managed to break out of the 21.5 odd mark, bouncing from the previous supports of 200-day moving average, I think 18.5 odd levels for itself. So even that asset class now starts to look very attractive.
Okay, so that's the take coming in. But since we're talking about the global asset classes, Kunal, what about dollar index? Has been on a bit of a downtrend. If you're watching out for that?
So yeah, I think 102, 103 has been a bit of a resistance of sorts for dollar index. So there are 2 asset classes like dollar index and Brent crude, which have been inching lower from their respective highs for themselves. So I think it's a trend for the overall global asset classes, where you've seen Brent crude specifically from 92, 94 odd dollars to now just in the tune of I think 75 to 80 odd range for itself, and dollar index I think from 106, which was the recent high for dollar index, to now 102, 103 odd range the last I'd seen. So I think it indicates that these are the 2 asset classes which are trending lower. So this would probably be a very slow, gradual movement. I'm not expecting a very sharp sell-off into dollar index from current levels as well. But I believe that maybe a drop of another couple of points in the next couple of months could be something which can be strongly seen in the dollar index as well.
Sanjeev, you've been positive on GAIL among all the gas stocks, and it has done pretty well out of the other big PSUs. But MGL, IGL, they have not done as well. Would you also look at, you'll widen your radar on gas, or you would still stick to GAIL itself?
So Ajay, like you rightly pointed out, all the three, MGL, IGL, Gujarat Gas have lagged, and more to do with that one-off which came from the government of Delhi government, where they said that by 2030 they will be, by 2025 25% will be reduction in CNG and so on. I think that is all talk. You need a huge infrastructure before you get there. You are aware that DTC and the CVs have already issued, commercial vehicles have already got 10-year licenses till 2028, where these CNG models cannot be changed. And the government and the managements have explained why they are diversifying, and CNG continues to grow. In fact, IGL is investing more. I still think there is a lot of value in them. But Ajay, the market is uncanny. It is chasing the stocks or the beta, which is much higher than everyone. Where REC, PFC, nobody expected to be 4 times. NTPC is a tripler, and GAIL has just started a move. But I have been positive from 85 levels. How can you not have GAIL do outperformance? And thirdly, I still think that some of the OMCs, they are going to be re-rated on the back that even today you are getting Russian oil at a 20% discount. You are the second largest importer. And today you exchange in rupee dominated with the UAE and so on. So it's an extreme positive for these OMCs, which were always undervalued. But yes, IGL is in our portfolio from the 385, 390 level. We still think 475 is a fair level for IGL. But like I said, there is more momentum in GAIL and the other stocks, where you are seeing much more traction on the upside. Till you get another quarter of earnings, people will still look for cues to whether to get into these gas utilities or not.
Point taken. Hold that thought, Mr. Bhasin. We also are getting some exclusive information about the interim budget that might continue the capital expenditure on the infrastructure sector. My colleague is joining us with the latest on what is expected for the railway sector. Sameer, tell us more.
The big development that we are picking up from our sources is related to the infrastructure sector. Sources have confirmed that Modi-led government will continue its focus on the infra sector, on the expansion of the infrastructure, and the intention will be reflected in the upcoming interim budget. So there has been a plan that has been laid out by the railway ministry officials, and the plan indicates that over $7 trillion investment will be done in the railway sector for railway network expansion. This amount of more than $7 trillion will be invested in laying of new tracks. There is a number that railway targets that more than 50,000 kilometers of new rail tracks will be laid over in a period of next 10 years, and not just a new railway line, but the doubling, tripling of the existing railway network that is also to be done. The gauge conversion to the broad gauge is also there in the plan. In addition to this, the average speed of passenger train has to be improved and it has to be increased, and for the same, the signaling system will be upgraded, and this amount or the investment that is there on the card, that will be done for the signaling upgradation as well. So that is a massive plan that related to the infrastructure expansion over a period of next 10 years. And sources have indicated that this is not just for railways. A whooping investment will also be done for the roadways or the highway sector and even for the shipping sector. And interim budget will give intention, but when the full-fledged budget will be announced, will be released, then these big announcements will be announced by the central government.
All right, thanks very much for that, Sameer. Sanjeev, out of the defense stocks, I mean, nobody's questioning that the business model. In fact, some of them are also talking about export ambition, etc. But the fact is that orders have come in and visibility of orders there. Stocks have run up quite a lot, aren't they? Haven't they? I mean, is it prudent to buy defense even at current levels, or just hold on to them if you have had a good entry, but look at buying only on pullbacks?
Yeah, Ajay, I fully agree with you. I mean, the order books will always remain strong. The executions are always going to be, you don't know how fast, and quarterly results are very difficult to track. But, they've had the dreamiest of runs which you ever imagined for HAL, Bharat Dynamics, or a BL. We've been positive. We've got in these stocks much lower, and I cannot advocate to buy now. When you get these big calls now, you from these foreign brokerages, generally, Ajay, historically, my in my history, these are tops being made. So don't chase them. There is less room of comfort there on the valuations. That's all I would say. I can see a plethora of other stocks which can give you, like I told you, the intermediaries. Why not look at some of the insurance plays? Insurance companies are going to be the bellwether, more better than a fixed deposit for the next 15, 20, 30 years. And even if we've had this IRDA consultation, I think there will be a resolution on this surrender value. I think some of the insurance players are very, very attractive given their track record, given the type of innovation they are with in products. So I would go with a Max Finance or an HDFC Life. They have corrected recently. And like I said, intermediaries, that is insurance, broking, AMC, custodian, and exchanges, these are going to be there for the next 20 years and more.
Yeah, talking about the intermediaries, there is one of the initiations that has happened on Protean or NSDL as well. In fact, there have been a few initiations this morning. Let me go across to my colleague Asesha to find out more on this. Hi Asesha, good morning.
Well, yes, 3 initiating notes that have come in this morning. First up, let's talk about Protean, where Equirus has initiated coverage with a long rating and a target price of 1500. The stock currently trades at 1200 odd levels. They say that it is a bet on India's digitization story. They expect new businesses of ONDC, cloud and international expansion to drive growth for the company from here on. Over the period FY23 to 26, they expect revenue CAGR of 26%, EBITDA CAGR of about 38% and PAT CAGR of 28% over the corresponding period. Meanwhile, we also have a note that has come in from MK on Tejas Networks with a buy rating and a target price of 1050. They say company is set to execute orders worth at least 29,200 crores over the period FY24 to 28, and that multiple levers are in place that will aid growth for the company from here on. They see revenue peaking out in FY25 and settling at 5 times FY24 levels. So they've initiated coverage with a buy rating and a target price of 1050. Meanwhile, Equirus has also come out with an initiating note on Alchem Laboratories with a target price of 6,295 rupees per share. They say they expect higher domestic margins to expand by about 650 to 700 basis points over the period FY23 to 26. Alchem is targeting high growth chronic market by launching products and plugging portfolio gaps. They said they have initiated coverage with a buy. 6,295 rupees is the target they've given for Alchem Laboratories.
All right, these are some of the interesting brokerage notes this morning. Protean eGov is something we should keep an eye out for, because that stock got a very lukewarm response on listing too. I remember initially, just 4% premium, 940, 930 odd is what it got listed at, and people thought, it's just okay types, but not many realized that it could be a e-governance vehicle of the government, because they're also looking at expanding the business abroad. Then it saw a good run of 30%, hovering at 1200. Now 1500 is what MK looks at. Have you by any chance, Sanjeev, looked at this one, Protean eGov?
No, Ajay, I have not had a look at this one.
No problem. You already have 800 stocks on your radar. I don't want to burden you with more, and you're always reshuffling them. But thanks very much for joining us on the show today. Kunal, it's a very recent, I think 2-3 months. Would you have enough data to comment on it? Or
no, not really. I think it was erstwhile NSDL, if I'm not wrong.
NSDL. So I asked the management, what is the meaning of Protean? Because that intrigued me that till 2-3 months before listing, they just changed the name to Protean eGov. They said the meaning is change. And that itself got a sense that the business model is, they are trying to change the business model, expand the contours of it, just beyond Aadhaar and all of that. Today management will be coming on our channel later in the day, and we'll be discussing more. How is change being implemented? 36% in a 3-month period is not bad. People who held on to it, of course, made good money. But talking of some other stocks which are in focus, there's a big upgrade on Tejas Networks. We've already spoken about it. Also, India Glycols. While chemical stocks are running, Nooresh, India Glycols is expanding capacity at a time when people have low visibility of growth. How do the charts look? It has come back from 530 or to 750 in the last 6 months.
So the stock topped out somewhere in 2021-22 around that 1050-1100 mark. And since then, it corrected slowly all the way down to 550 levels. Last few months, it has started making a comeback and has started making a fresh consolidation between closer to say 680 levels to 780, 800. So till the time it doesn't cross those levels, we saw a gap up also a few days back. Then it again faded off, retested the gap, and we are slowly making a comeback. But would be interested only on the stock once it sustains the 780, 790 mark. If that happens, that would be a short-term breakout and could again start a rally towards the 1000 mark. So for now, watching it, but not a buy at current levels.
Not a bad current levels, but Kunal, yesterday a couple of stocks that were breaking out were Jaykumar Infrastructure and All Cargo Logistics. What's your take on those? Should one buy into the rally further?
Well, in Jaykumar Infra, we were discussing that how the stock had confirmed a breakout. There was a lot of news flow positive for the stock price. And I think if I'm not wrong, around that 530, 540 mark, when the stock opened with a gap yesterday, from there itself, the stock saw another 8%, 10% rise, closing or inching towards the 600 levels. Now, with this huge gap which has been created, I don't sense that it's time to try and take a fresh trade over here. Wait out for at least the partial filling of the gap for the stock price. I think that could be a much better level to try and buy the stock, or maybe a better risk reward to enter the stock at those levels. All Cargo, on the other hand, I think has confirmed a very recent breakout. So when you look at this in the context of the previous highs in 2021, I think the previous highs was around 380 mark for the stock price. The recent low was around 260 levels. So the risk reward is still beneficial for taking a trade over here, because then even if you're looking at the previous high as a target, which is closer to this 380 levels, we could be looking at least another 20% jump into the stock price.
Honestly, I've not been able to understand the restructuring they've done. First, they split the company into three, and then
now they're consolidating again.
Seriously, we need to look at it a little more.
We did speak with the management. They did try to clarify that this is the last step of the restructuring and this is what our final aim was. But then still a lot of confusion on the street about it. But let's see, the management was fairly confident that in the second half of the year, the international business will bounce back as well. The volumes are picking up. So let's watch out for this one. But we're also watching out for Arvind Fashion because they met a few analysts. What were the key takeaways? Snehi is joining us to talk to us about that. Snehi, looks like some margin expansion on the cards.
Well, Anisha, Arvind Fashion held its management meet and DAM Capital has come out with a note on that. Now, the company expects that the government will give it enough time to liquidate all the inventory that they have sourced before the BIS norms kick in. Now, the company is also claiming that the USP or the unique, the USP is that they are the most searched footwear brand in the country as well as we speak. And they're saying that the revenue contribution for the D2C channels, over which Arvind Fashion actually has control over pricing and inventory, has gone up from roughly 25% to 50% in the last 6 to 8 months. The company is aiming at expanding margins by 100 to 150 bips every financial year. They're also aiming to clock in 500 crore in revenue by the next 2 to 3 years in the footwear segment. So on the back of all of this positive commentary that's coming in from the company, DAM Capital has gone ahead and has maintained its buy rating, but has hiked the target price on Arvind Fashion from 448 rupees to 551 rupees per share.
Right, Snehi, Tommy Hilfiger, Calvin Klein, US Polo, Flying Machine, Arrow. Have you tried any of Arvind Fashion's brands yourself?
I think I'm losing audio.
Okay, no problem.
I'm sure all of us have tried each one of them because it's very massy.
Very massy.
And even USP and the other brands, right?
Their brands do phenomenally well.
Yeah.
But the stock is not, you never find the stock cheap. Even at current valuation, between 35, 40 times 1 year forward.
But I mean, the other comparison is Trent, right? Which is what, 100x, if you can call it that. So it's
Arvind
anyone's
is like
guess.
class of its own.
True that.
In terms of brands they offer.
You meant Trent.
No, I'm talking about Arvind.
Even Arvind,
I'm a
for
big
that
fan
matter.
of Arvind.
Okay. No, I think both the companies have their own standing. It's just the valuation differential is just
Trent
too
is more
huge.
of the institution Trent has built, that kind of 100 times. It never corrects. But Arvind is actually,
I hear you. The brands that they have is a lot more
brands,
appeal
yeah.
and a brand recall is much higher. But that was about Arvind and the way we look at the stocks as well as some of the brands as well. Let's take a look at some of the other newsmakers which are likely to be in news. SJVN, of course, was one of the stocks wherein they have bagged an order of around 500 megawatt thereabout. And then Vishnukumar Pugalia is the other one. A 900 crore order win is what we are is what has happened for them, and we are expecting that we'll get joined by the management very soon to talk to us about what exactly is happening. In fact, infrastructure space as a whole, Nooresh, let me come to you on that one. NCC, NBCC, ITD cementation, these smaller infrastructure EPC companies is something which has done quite well for themselves. Any name that you would want to recommend from these pack?
So out of these names, as of now, one which still looks interesting is IRB Infra, because that's a stock which used to be the torchbearer back 10 years back, which was the one which rallied the most, etc. And now finally, after 2010, the stock has broken out into new all-time highs. So the stock used to be between, say, 30 multiple times, and now it has started trending. So this could be a stock which has slowly and steadily made a comeback. Then we continue to like NCC or Ahluwalia contracts, which are slow and steady uptrends. So NCC at current levels looks promising, and then other one is Ahluwalia. So overall, the whole pack has been in a slow and steady uptrend. One can pick their choices, but as of now, these three names still look promising.
Point taken. So those are some of the recommendations. IRB still looks interesting, and Ahluwalia is the other one that we are watching out. But we're talking about the order wins, and 880, 890 crore is something that Vishnukumar Pugalia has managed to bag for itself. We have with us Mr. Sarfaraz, if I have it right, to talk to us about what exactly Mr. Sarfaraz Ahmed, the CFO at the company, is joining us to talk to us about this order win and what else is happening in the company. Hi, sir. Thanks so much for making time and speaking with us. A large order win because your market capitalization is what, 3,000 odd crores versus this order which is 900 crores. And I think the last time your order book was around 3,800 crores. Talk to me about what the order book stands at right now. What kind of margins are you expecting on this one? When will the execution start?
Yes, ma'am. Actually, we are regularly, our bidding process is regular. And we have also win earlier projects in the MP, and likely we are going to win the other projects in UP also. And now we have win the project in Uttarakhand, rupees 898.7 crores. And the same pace company is going on the same pace.
Sure. But Mr. Sarfaraz, when you say that there are other orders that you're likely to win as well, talk to me about the pipeline. What does the order book pipeline look like?
See, ma'am, the order pipeline is under 5,000 to 7,000 crores. We are already, this is the regular process of bidding actually.
Okay, 5,000 to 7,000 crores, that's what you're saying, right?
Yes, yes.
Okay, how many big orders are you aiming at bidding for? Do you have visibility? You work with the government so closely, I'm sure, across states. Which are the states which are very aggressively calling out for large orders and you're aiming at them?
As of now, government focus is on infrastructure industry, and almost all states we are working, they are focusing on the new projects like Rajasthan, UP, Uttarakhand, MP, as well as Northeast.
So you have managed to double your top line from FY21 to FY23. Going forward, do you expect this kind of pace to continue? Can you double from here on as well in a couple of years?
If we look historic, our CAGR was 46.8%, and year-on-year growth was 55%. And in FY24, on a half-yearly basis, we have achieved 49% growth. So it seems that we can achieve.
Okay, fair enough. And give us a sense as to what the outlook is in terms of your geographical presence, because Rajasthan constitutes the largest share in your order book. If I understand, it's at 62%. How much do you see that growing? And will you diversify and expand to other regions? Can you walk us through what the rest of the order book comprises?
Yes, we are working in 10 states and 1 union territory. And we are getting orders in other states also. And as of 30th September, our order book position is in Rajasthan is 51%, UP 15%, MP 15%, and rest in other states. So we are diversifying our order book also.
Okay, you're diversifying your order book. You're talking about how the revenue growth is going to be strong, but you're also expanding your margins. From sub 10% that it was there in 2021, you are now close to 14%. Going forward, what will be the margin profile? And also, are you looking to diversify it into the private orders as well? Because right now you're concentrated towards government orders.
We are focusing, ma'am, on government orders only, EPC based orders, not on private orders. And our margin will be sustained on the same ratio.
15% is the sustainable margin that you're talking about.
Yes, ma'am.
Okay. Point taken. These were largely the questions I had for you. But just, Mr. Sarfaraz, the last word, with the elections coming, next year, do you expect some sort of maybe, a disruption in your execution or order inflows? Do you think they can slow down next year?
Ma'am, we are working in this industry from last 36 years, and we have faced almost 7 to 8 cycles like elections. Yes, there is a slight delay in the payments and execution also, but we are familiar with this situation and we can manage the same.
Okay, yes, and you've been managing it well, Mr. Sarfaraz. On that note, we'll let you go. Appreciate you making time and speaking with us. So that's the latest coming in from the management. The pipeline is very strong. 5 to 7,000 crore is what they have the visibility for. And of course, this large order win that we have seen of 890 crores. Another candidate, I think.
So they have, do you have the latest figure on the revenue front? 2-3 times revenue, I think.
Check it.
Yeah, it will be interesting to see what is the visibility, how many years of revenue visibility. Because I think 5 to 7,000 crore order book visibility now, right now, with a 15% kind of a margin. And
yeah, so that right now revenue
We
profile.
have the quarterly Q2.
No, I think annual is also
you have
1,200 odd crores in terms of financials. So, that's
so
quite
the
a bit.
visibility of 3-4 years is kind of
Very
pretty
strong.
Pretty interesting. The stock has just doubled after listing, $100 to 200 odd. It'll be interesting how it locks, moves by 95, 97, settles there. Take a short break, come back, more news and analysis on the other side.